Hello and welcome to another update video about gold. So gold did push a bit higher. It actually moved to 1875. We now need to take it level by level. So the thing is, with gold, it has obviously not shown us any reversal signal to the downside as highlighted in the previous videos. As long as we are in this channel or ascending wedge, it can probably extend further. I would not just without, for example, breaking out of this channel, believe that this move up is over, because this is now extended further than initially assumed, which is always possible in these scenarios and in these waves, especially when you are in such a nicely defined channel, as long as the trend is ongoing. Yeah, and you know, these ascending trend lines or trend lines in general, they are ways of determining if a trend has shifted. There are targets, there are ideal targets. 68 was an ideal target, and we have now slightly broken that. And if it extends further, it extends further. We obviously on the daily have an engulfing bullish candle. My view is still we are towards the end of this uptrend, but it still can extend further up. With the latest spike, I have to change the wave count here a bit. Just want to show you how I do this, not in really significant ways, but my assumption would be that I go to the 4-hour chart. It just changes the lower level assumptions a little bit here on the smaller time frame. I would have to assume, oops, this was a 1-2 back here. Then we moved up in a third wave, which would then have peaked here. Then we came down in a fourth, which bottomed here, and then we are moving up, possibly still in a fifth wave. At the moment we are in the channel though. Yeah, at the moment we are in the channel. So we haven't broken, not to the upside, not to the downside. And how do we label this now? So we can label it at the moment as a wave 1 here. I will change the color in a minute. As wave 2 here, then this must be a 3, 4, 5. And again, the high could be in here, but again, as long as we are in this channel, we cannot assume it's over. With Elliott wave and in any TA, when you have targets reached, which we have, then it doesn't mean it needs to turn down now. It means the minimum expectations of this uptrend are complete, and we need to watch for reversal signals. That red candle here was a first indication, but not a signal, not really, because we had that here, 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 and here, and in every uptrend you also get corrective downside. But I think a break about below this channel would be a good signal, and then obviously, as I mentioned, the break below in this case it would be the previous wave 4, so we can lift up that target area, or that, let's call it signal, yeah, that level. If we break below 1829, that would be a strong signal that we are breaking down. We had previously also, I think the way I did draw the channel before, we had a breakout before, but we never broke below the previous wave 4 low, so that's of course important as well. But yeah, this is how it can now stretch out a bit further. What would be any likely target here for the fifth wave is not that easy in terms of Fibonacci extensions, because this seems to be a diagonal pattern, and if we are in a diagonal, we cannot really use the Fib extensions too well. But if we make an attempt, then if we break out of the channel to the upside, next target would be based on Fib extensions. Well, first of all, I think we have here resistance at around 1882, which is the previous wave X high. So that would be the next key resistance. And then we have the 1-to-1 ratio. No, let me just double check. What have I just done? Have I taken the wave 3 length, or have I taken the wave 1? 1 second. Yeah, okay, so if I take the 61.8% extension of the third wave, which is an ideal target for a fifth wave, then we also get to that 8080 level, 1880. So that's pretty much where we've got that wave X high, so that would match. Of got a bit of confluence there in terms of resistance. So again, this can bounce a little bit up further now that we have got an extension here in wave 5. And target after that, if we break above that, another way to calculate the target would be to take the, just think, don't want to make a mistake here, would be to take the length of the wave 1, and then we go and look for the 1-to-1 ratio, also takes us to 1880. So there's definitely an area of confluence there. And one more level to the upside would be the 1912 level. That would be the next target if we really break above 1882 as well, in that region there. Then we've got 1912. That's the 1.618 extension. That would be quite a strong wave 5 then, but possible. So it continues to stretch out further. Really interesting. I mean, the higher it goes, to be honest, the clearer it is that a bear market low was probably already in. So it's actually a good sign, and it could really be that of all the assets that I'm covering, gold might be, and silver, and I will do another silver update in the next few days, gold and silver might be the first assets really that have ended the bear market. It would be exciting. I am very bullish on gold in the next year or so, or in 2023, 2024, because there is a rally expected all the way up to around 2,500, 2,600, at the very least. So yeah, that's my update about gold. When we finish this wave 1 finally, then the wave 2 correction will be the stress test for this bullish case. It's just that the higher we go, the less likely it is that this is still a corrective move to the upside. So it's getting more and more interesting. I will now have to adjust slightly the green support area, which will be that sort of stress test area based on the latest high. But nah, I won't do it in this video because I just have to shift it up $1 or so. So ideally I would expect this wave 2 then to get into the region between 1747 and 1674. And if we drop below the 78.6% level at 1674, then most likely this all was just a correction and we move down impulsively for another low. That, however, would not be good for gold long term, because as I explained previously, any drop below the $1,600 level would increase the risk massively to go down all the way to $1,000, because then we are changing from a wave 4 low to a wave 2 low. Because if we drop below 1600 and sustain, this is very unlikely that this is still a wave 4. It would then most likely become a wave 2, which can drop much, much lower. Okay, and that's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.